But Sri, it does seem like, however it happened, a very short speech, a very direct speech. The bond market has it now, and the equity market has it now. So that seems to be the case. That at the very least, Powell was successful in getting his message across. Is that what you think now? And what does that mean for bond yields?
Yeah, he has been successful so far in convincing both bond markets and equity markets that he is going to be tough. But I still maintain, Steve, we are going to see higher and higher 10-year Treasury yields. I told Joe on this program just a couple of weeks ago that we were heading to 350 when we were much lower than where we are today. I still think we are 350. I may change my forecast to something even higher. The reason is Powell has to keep hiking until he really sees inflation come down. He cannot worry about unemployment. He cannot yet worry about the stock market. So while he has convinced markets so far, if you have a credit event, something like long-term credit management of 1998 take place, if equity markets crash, as we saw in the second half of December 2018, he's going to want to pivot. So he is convincing until he's no longer convincing. And that moment of pivot, I think, is going to come within the next 6 months.
Right. So, Sri, what is your outlook when it comes to a recession? I don't think that the 10-year goes to 350 if the economy is in a recession.
I think you're going to have not just a recession, Steve, but a stagflation. This is a repeat of the 1970s. You're going to have a recession combined with rapid price increases. Whether it comes from energy or whether it comes from rent or food, there are several contributing factors. It's hard to see where it's coming from. Look, for instance, at the G7 countries, which are going to decide today to put a limit on Russian oil price. That, to me, is an absolutely foolish decision. If they can go through with it, you might expect at some point Russia to react by cutting oil supplies to the rest of the world. And you can see oil price shooting up to $150 a barrel under those circumstances, recession or no recession. Remember, that's what happened in 1973 and 1979. Oil price shot up even though we were in recession, and that caused inflation to stay high.